Hey, Jeff Carlisa here from 38 Special, and we're rocking it up right here with Traders Nation.
We are. Welcome back. You are tuned into Traders Nation. My pleasure to have back with us once again Eddie Ghabour. He's co-owner of Key Advisors Group. Eddie, welcome back to Traders Nation. How are you today?
I'm great. Thank you for having me.
Sure. Always a pleasure, Eddie. So, Eddie, back in August, we discussed about the longest bull market run, if you recall. Where are we from there?
Well, I don't think this October drop that we've seen, this volatility we've seen, means that it's the end of the bull market. I don't look at October as the start of a bear market.
Yeah.
I think this is just a normal correction that we actually see in secular bull markets.
Okay.
It makes investors uncomfortable. But look, when you come off a year like last year, which was, I would argue, last year was not normal because there really wasn't a lot of volatility. Everything just kind of went straight up.
Sure.
2018 is more of a normal year in a secular bull market where you do see double-digit drops throughout the year.
Sure. All right. So what's causing the volatility that we're currently seeing right now? Especially, I mean, looking at the tech area, I think it is. Are we looking at the slow growth? Is there any slow growth, for instance, it's being reported out of Google and Amazon? Your thoughts?
Well, I think there's a couple things causing the volatility.
Yeah.
Number one is in the earnings calls that have been coming out. Earnings have been fantastic still, but they're putting some caution in regards to growth for 2019. And so you went from a market that had a very, very high expectation rate of 20-plus revenue growth, and now you're looking at companies saying, it may be 10% or 11%. I would argue that a 10% revenue growth is still a strong number.
Sure.
It's just, and the other thing I think you're seeing happen is I think you are starting to see some sector rotation. Value stocks have been underperforming growth for quite a while.
Yeah.
And so growth valuations got really high, and it was well overdue for a correction.
Oh.
The other thing that I think that you're seeing is concern with the Federal Reserve and how aggressive they're going to be in rates.
Sure.
Last time, Chairman Powell said that we were going to raise rates until we went to neutral, and we were nowhere near neutral. And that spooked the market because we don't know what neutral is.
Right.
And one thing the markets don't like is uncertainty. So I think you'll see the Fed's tone change a little bit in December, calm the markets down, and we will get back to our fundamentals, and we'll continue on this secular bull market.
Why do you think some of these companies are drawing back their numbers? Are they just being conservative in way of 2019? What are your thoughts on that?
It's a multiple of things. I think number one is they're concerned with rates. When rates rise, that means the cost of business and capital is more expensive.
Yeah.
And secondly, I think there's some concerns in regards to the tariffs next year. Right now there's a potential 25% tariff on goods from China, as we all know.
Yeah.
And I think that's caused businesses to kind of say, hey, look, there are some potential dark clouds that could hurt some revenue growth next year, and those are the two things.
Right.
So if we fix trade and the Fed comes out with a more defined statement, the dark clouds are gone.
Yeah.
Off to the races again.
Do you think by close year end, the Feds may even give us a little bit more clarity when it comes to where rates are going to be?
I think they will. I think this October volatility and some of the concerns that businesses are starting to say, and you're seeing some cracks in the real estate market.
Okay.
I think they'll be very, very clear in their December statement as far as what path they're going to take next year.
Right. Okay. Hey, with the U.S. economic growth still solid, many companies are still growing their sales and earnings. What's going to help reduce the amount of volatility that we're seeing? I know we're talking about the Fed rate. We're talking about outlook into 2019. But I mean, economic growth is still pretty strong. Some of these companies they're loving the fact that we're getting back into a consumer economy, and they're kind of planning for that. Do you think that they'll continue to grow in 2019, Eddie?
I do. I think when you look at the labor market, the labor market is really tight, and we saw 3.1% wages reported, an increase in wages reported yesterday. That's the highest number in 10 years.
Yeah.
So fundamentally, I can't imagine something. It would have to be something really drastic for this economy to stop on a dime and go backwards. So I still think we're going to have economic growth going into 2019.
Yeah.
And as far as volatility, I think investors need to kind of get to the mindset that volatility is here to stay. That's normal. One way you will calm the volatility down a little bit again, is clarity on trade.
Yeah.
Once we get an agreement with China and the Fed statement. Those are two very, very big items that will cause some calmness in the markets.
I think we have a lot of real estate between now and then when it comes to our trade with China. I mean, there's some good news coming out here today in regards to this administration's had some really good talks with China. But that's just talks right now. I mean, we really don't have nothing laid out, nothing mapped out, if you will, something solid and tangible that we can go on. I think we got a long ways to go on that. Your thoughts?
I agree with you. I don't think that's something that's going to be solved overnight. I think China, with some of the stimulus that they've done for their economy right now because of their concerns, is kind of saying they're positioning themselves for a longer-term battle. So as an investor, I don't think you're going to find any closure on this by the end of the year.
Right.
And I think best-case scenario is sometime in the first half of next year.
Okay, let's move on to some investors, long-term investors. I mean, they need to protect themselves. I mean, they really do. Should they be rebalancing their portfolio if volatility in markets, if it makes them too nervous? Because you talked about that earlier. And some people, some cats are out there, they're nervous. And I don't blame them. Do they need to rebalance? What should they be doing?
You know, I think every investor shouldn't wait until the market has a double-digit drop to reassess their risk.
Right.
I think people really need to make sure that they clearly understand the risk and the potential losses on their portfolio.
Yeah.
And if they're uncomfortable with the risk that they're taking, then yes, they need to reevaluate and maybe become a little bit more defensive. I personally think proper diversification and rebalancing portfolios throughout the year, no matter what type of market we're in, is a really nice risk management strategy to kind of keep people disciplined.
Yeah.
Because my concern is if you're not rebalancing and now all of a sudden growth stocks make a big part of your portfolio, well, now you have an Amazon go down by 20% and that's one of your biggest holdings. That puts you at susceptible to quite a bit of losses.
Yeah, it sure does. So what are you saying? Maybe every quarter people should look at, the investors should look at their portfolio every quarter, every half a year, every month?
Every quarter. I think every month is overkill, but I think every quarter you should be reevaluating and rebalancing your portfolio to the allocation that you feel comfortable with from risk standpoint.
All right, and certainly have an investment advisor help them do that?
Absolutely.
Yeah. I mean, some people, they go on it on their own, but boy, I tell you what, they can get in the house of pain if they're wrong.
Well, I think the problem is, and I had a client sum this up the best, when you don't have a sounding board or a team to go off of, many times you can make an investment decision based off of emotion versus fundamentals.
Sure.
And anytime you make an investment decision based on emotion, it's probably not going to be the right move.
Yeah. How do you think we're going to finish up here in 2018 in way of the economy and the market?
So I think the markets are going to bounce back, and I think we're going to finish in positive territory for the year. So I think we have the potential to erase these losses we had in October because I'm going on the premise that I think the Fed is going to be a little bit more direct in their message.
Yeah.
If they're not direct in their message, then I think you can finish in negative territory for the year. But I'm not gonna bet on that side of the trade.
Do you follow the retailers at all? You think the retailers? I saw some reports out there. The retailers and some of the big box stores are really going to have problems. It's like a make or break. It really is a make or break for them this year. It seems like it is every year, but it's like this year is really a make or break for some of these big box retailers. Your thoughts on them?
Yeah, that's such a tough space right now. I mean, you have the Amazon effect, and I think just retail is just a very, very tough business model to succeed in long term right now.
Yeah.
You're going to have to really have a niche market to be able to attract people to get foot traffic.
Yeah.
Now, I think retail sales in the holiday season are going to be very, very strong.
Okay.
Consumer confidence is really high. People are feeling very good about their job security, and usually when you have a scenario like that, you see strong spending in the fourth quarter, and that can help us with the Santa rally that we're hoping for.
Yeah, I sure hope so. All right, we're out of time. Hey, Eddie, where can we find you today? You have a website? Where?
Yes, Key Advisors Group LLC.com is the best place to look at us.
All right, folks, head on over there today. Key Advisors Group LLC.com. Key Advisors Group LLC.com. As always, Eddie, we do appreciate your time here on Traders Nation.
Thank you.
You're welcome. All right, stay tuned. On the other side, we got more stocks, news, and more. Stay tuned.